My grandfather died on February 11th, 2024. He was 89 years old. He'd survived a war, raised 4 kids on a mechanic's salary, and never once in his life owned a stock, a bond, or a mutual fund. He didn't trust Wall Street. He didn't trust banks. He didn't trust any institution that could change the rules after you'd already put your money in. What he trusted was metal. Cold, heavy, silent metal that didn't need electricity, didn't need an internet connection, didn't need a government's permission to be valuable. And when we opened his safe deposit box 3 weeks after the funeral, when my father and I stood in that tiny room at First National Bank with a notary watching, when we lifted the lid and saw what was inside, my father started crying. Not because it was sad, because of what it meant, because of what it represented, because of what that man had quietly done over 49 years that none of us fully understood until that moment. Inside that box were 4,127 ounces of silver, Morgan dollars, peace dollars, Walking Liberty halves, Washington quarters, and Roosevelt dimes. 90% constitutional silver, pre-1965 coins that you could still find in circulation when he started buying in 1975. There were also 100-ounce bars. 10 of them, Johnson Mathey bars with sequential serial numbers, and there were rolls, dozens of rolls of 1-ounce rounds from mints that don't even exist anymore. He had been buying silver for 49 years, quietly, consistently, without telling anyone except my grandmother who died in 2016. And what that silver is worth today, what it represents in purchasing power, what it reveals about the difference between saving in dollars versus saving in metal, is a story that I believe every person in America needs to hear. Let me give you the numbers because this video is about real math, not emotion, though I'll admit the emotion is hard to separate. We spent 3 weeks cataloging everything. We weighed every coin. We counted every bar. We sorted everything into categories. We cross-referenced dates and mint marks. We consulted 3 different appraisers, and here's what we found. Category 1, 90% constitutional silver. This was the bulk of the collection. 2,147 ounces of actual silver weight contained in pre-1965 U.S. coins. The breakdown, $8,400 face value in Washington quarters. That's 33,600 individual quarters, each containing 0.1808 troy ounces of silver. Total silver weight, 6,075 ounces of quarters. Wait, let me recalculate. $8,400 face value at 0.715 ounces of silver per dollar of face value equals 6,006 ounces. Let me be precise. $1 face value of pre-1965 quarters contains approximately 0.715 troy ounces of silver. So $8,400 face value equals 6,006 troy ounces. But that's the total face value across all constitutional silver, not just quarters. Let me redo this correctly. Total constitutional silver, $3,880 face value. That includes quarters, dimes, half dollars, and silver dollars. At 0.7115 ounces of silver per dollar of face value for dimes, quarters, and halves, the non-dollar coins contained approximately 2,138 ounces. The Morgan and Peace dollars, of which there were 709, contained 0.7734 ounces each, totaling 548 ounces. Combined constitutional silver, approximately 2,686 ounces. Category 2, 100-ounce bars, 10 Johnson Mathey bars at 100 ounces each, 1,000 ounces. Category 3, 1-ounce rounds, 441 individual rounds from various mints, 441 ounces. Grand total, 2,686, plus 1,000 plus 441, 4,127 ounces of silver. Now let's talk about what he paid because my grandfather, God bless him, kept records. Not organized records, not a spreadsheet, a shoebox. A literal shoebox filled with receipts, notes on napkins, scribbled calculations on the backs of envelopes, and small ledger books from the kind of stationery store that doesn't exist anymore. It took my father and me 2 weekends to sort through it. But we reconstructed his purchase history with reasonable accuracy. He started buying in 1975. The first receipt we found was dated March 14, 1975. It was from a coin dealer in Springfield, Illinois, where he lived at the time. He bought $20 face value of Washington quarters for $72. That works out to 3.6x face value. Silver was around $4.50 per ounce at the time. He paid approximately $5.04 per ounce of silver content. His last purchase we can document was November 2019. He bought a 100-ounce Johnson Matthey bar from APMEX for $1,182. That's $17.82 per ounce. Over 44 years of documented purchases, his total spending on silver was approximately $87,340. I say approximately because some receipts were illegible and some periods have no records at all. We estimate a margin of error of plus or minus $5,000. His average cost per ounce across all purchases over 44 years was approximately $21.17 per ounce. Now, what is the silver worth today? At the current spot price of $32.18 per ounce, the pure melt value of 4,227 ounces is $132,807. But constitutional silver doesn't trade at melt value. It trades at a multiple of face value. The current dealer buy price for 90% constitutional silver is approximately 23x to 24x face value. At 23.5x face value, the $3,980 face value of constitutional coins is worth $93,530. That's higher than melt because of the numismatic and collectible premium on pre-1965 coins. The 709 Morgan and Peace dollars are worth significantly more than melt. Common date Morgans in VG to VF condition trade for $32 to $45 each, depending on date and mint mark. We had 512 Morgans and 197 Peace dollars. After consulting our appraiser, the Morgans were valued at an average of $38 each, totaling $19,456. The Peace dollars averaged $34 each, totaling $6,698. The 100-ounce bars are straightforward. 10 bars at current dealer buy price of approximately $32.50 per ounce equals $32,500. The 1-ounce rounds, being generic and from lesser-known mints, trade at approximately spot-to-spot plus $1. Call it $32.50 each. 441 rounds at $32.50 equals 14,333s. Total current value of the collection: constitutional quarters, dimes, and halves valued at approximately $53,276 using the face value multiple method. Morgan dollars at $19,456, Peace dollars at $6,698, 100-ounce bars at $32,500, 1-ounce rounds at $14,333s, grand total $126,363. Invested over 44 years, 87-sided $340. Nominal gain $39,023, nominal return 44.7% total, or approximately 0.85% per year compounded. And right there, right at that number, most financial advisors would stop. They would point at that 0.85% annual return and say, "See? Silver is a terrible investment. If your grandfather had put that money in the S&P 500, he'd have millions." And you know what? On a pure nominal return basis, they're right. $87,340 invested in the S&P 500 in equal annual installments starting in 1975 would be worth approximately $1.2 million today, depending on exact timing and dividends. Silver underperformed stocks by a massive margin. Case closed, silver is a bad investment. Except that analysis is wrong. It's wrong because it's measuring the wrong thing. It's comparing silver to stocks as if they serve the same purpose. They don't. And it's ignoring the real story of what my grandfather's silver actually accomplished. Let me show you what I mean. My grandfather didn't buy silver as an investment. He bought it as insurance. He bought it as savings. He bought it as money. And the correct comparison for money is not the stock market. The correct comparison for money is other forms of money, specifically the dollar. So let's compare silver to the dollar. In 1975, when my grandfather bought his first quarters, a gallon of gas cost 0.57. A loaf of bread cost 0.36. A new car cost $4,950. A median home cost $3,900. A gallon of milk cost $1.57, and the average household income was $13,720. Today, a gallon of gas costs $3.50. A loaf of bread costs $4.79. A new car costs $48,000. A median home costs $412,000. A gallon of milk costs $4.39. And the average household income is $74,580. Let me calculate the inflation-adjusted performance of my grandfather's silver versus simply holding dollars. If my grandfather had put his $87,340 in a coffee can instead of buying silver, what would that $87,340 buy today compared to when he saved it? The cumulative inflation rate from 1975 to 2025 is approximately 540%. That means $1 in 1975 has the purchasing power of approximately $0.16 today. His $87,340 in 1975 dollars would need to be approximately $558,976 in 2025 dollars just to maintain purchasing power. He has $126,363 in silver. That's still below inflation-adjusted break-even. So silver lost to inflation too? Not exactly. Here's where the analysis gets more nuanced and more honest. My grandfather didn't invest $87,340 in 1975. He invested it over 44 years in small increments as he could afford it. Some dollars were invested when silver was $4, some when it was $8, some when it was $15, some when it was $35, and some when it was $17. Each dollar was subject to different amounts of inflation from its investment date to today. The proper analysis is to compare each year's investment to what that same money would buy if held in cash. I did this calculation year by year using CPI data, and here's what I found. In years when silver was cheap relative to its long-term trend, primarily the late 1990s and early 2000s when silver was $4 to $6, the silver he bought dramatically outperformed cash. Those ounces purchased at $5 are now worth $32, a 540% return that roughly matches cumulative inflation from that period. In years when silver was expensive, particularly 2011 when he bought at $35 to $40, those ounces have actually lost value in nominal terms. They're worth less now than he paid. The overall performance depends on the weighting of cheap purchases versus expensive purchases. And because my grandfather bought consistently, small amounts every month for 44 years, his average cost was pulled down by the many years of cheap silver. But here's the real point. Here's what the financial advisors miss. Here's what the nominal return comparison completely ignores. My grandfather's silver survived everything. It survived the inflation of the late 1970s when CPI hit 14.8%. It survived the Volcker rate hikes when interest rates hit 20% and the economy cratered. It survived the 1987 crash. It survived the dot-com bubble. It survived 9/11. It survived the 2008 financial crisis when banks collapsed and the stock market fell 57%. It survived the COVID crash. It survived every single financial catastrophe of the last half-century. And it did so without counterparty risk, without a brokerage account, without a financial advisor taking 1% per year, without expense ratios, without management fees, without the risk of corporate fraud, delisting, or bankruptcy, without the need for electricity or internet access. My grandfather's silver sat in a box, silent, patient, real. And when we opened that box in 2024, every single ounce was still there. Every single ounce was still valuable. Every single ounce could be converted to cash within 24 hours at any coin shop in America. No questions asked. Compare that to other assets my grandfather could have owned. If he'd bought Enron stock, it would be worth $0. If he'd bought WorldCom stock, it would be worth $0. If he'd bought Lehman Brothers stock, it would be worth $0. If he'd bought Washington Mutual stock, it would be worth $0. If he'd put money in a savings account at Continental Illinois, the largest bank failure before 2008, he would have waited months for FDIC resolution and lost purchasing power to inflation in the meantime. If he'd bought bonds from any of the dozens of municipalities that declared bankruptcy, he would have received cents on the dollar. Silver cannot go to $0. It cannot be delisted. It cannot declare bankruptcy. It cannot be frozen by a sanctions order. It cannot be shut down by a regulatory action. It has been money for longer than any government, any corporation, any financial institution has existed. And it will be money long after the current system collapses. Now let me do the comparison that nobody ever does because this is the one that changes the conversation. Instead of comparing silver to stocks, let's compare silver to the dollar's purchasing power in terms of real goods. In 1975, 1 ounce of silver cost approximately $450. That ounce of silver bought approximately 8 gallons of gas. Today, 1 ounce of silver at $32 buys approximately 9 gallons of gas. Silver's purchasing power for gasoline increased slightly over 50 years. The dollar's purchasing power for gasoline decreased by 84% over the same period. In 1975, 1 ounce of silver bought approximately 12.5 loaves of bread. Today, 1 ounce of silver buys approximately 6.7 loaves. Silver lost purchasing power for bread, but it lost far less than the dollar. $4.50 in 1975 buys 0.94 loaves of bread today. The dollar lost 92.5% of its bread buying power. Silver lost 46%. In 1975, 1 ounce of silver bought approximately 2.9 gallons of milk. Today, 1 ounce buys approximately 7.3 gallons. Silver's milk buying power more than doubled. The dollar's milk buying power fell by 72%. Now let me do the big one. Housing. In 1975, a median home cost $30,500. At $4.50 per ounce, that house cost 8,178 ounces of silver. Today, a median home costs $412,000. At 30 tas per ounce, that house costs 12,175 ounces of silver. Silver has lost purchasing power for housing. You need 47% more silver to buy a median home today than in 1975, but the dollar has lost far more. $39,500 in 1975 is equivalent to approximately $252,800 in 2025 dollars. But the median home costs $412,000. The dollar lost 63% of its housing purchasing power even after adjusting for general inflation. Housing has outpaced both silver and dollars, but silver has held up better than cash. My grandfather's 4,127 ounces of silver would buy approximately 32% of a median home today. If he'd held $87,140 in cash, it would buy approximately 21% of a median home. Silver preserved 52% more housing purchasing power than dollars. Let me do the automotive comparison. In 1975, a new car cost $4,150. At $4.50 silver, that was 1,100 ounces. Today, a new car costs $48,000. At $32 silver, that's 1,500 ounces. Silver lost some automotive purchasing power, requiring 36% more ounces. But $4,150 in 1975 has the purchasing power of approximately $31,680 today. A car costs $48,000. The dollar lost 51% of its car buying power beyond inflation. Silver lost 36%. Silver preserved more purchasing power than cash. The pattern is consistent across every major category of real goods. Silver doesn't perfectly preserve purchasing power. Nothing does. But silver preserves purchasing power dramatically better than the dollar. And that is the correct comparison. Not silver versus the S&P 500. Silver versus the alternative that my grandfather actually faced, which was holding dollars in a savings account earning 2% while inflation ran at 4%. Now let me tell you the part of the story that matters most, because this is what the numbers can't capture. When my grandfather started buying silver in 1975, he was 40 years old. He made $14,000 a year as an auto mechanic. He had 4 kids, a mortgage, and no financial safety net. He didn't have a 401k because his employer didn't offer one. He didn't have a pension because he changed jobs 3 times. He didn't have savings because every time he built up a cash cushion, something happened. A car broke down. A kid needed braces. The furnace died. Life ate the cash, but it didn't eat the silver. Because the silver wasn't in the bank, it wasn't in a savings account that could be easily accessed. It wasn't liquid in the way that cash is liquid. It was in a safe deposit box that required a 20-minute drive to the bank, a wait in the lobby, a signature, and a trip to the vault. That friction, that inconvenience, was the feature. The silver was hard to spend. The silver was hard to liquidate on impulse. The silver sat there, accumulating, compounding in quantity, if not in price, while the cash got spent on life. My grandfather told my father once, and my father told me after the funeral, that the silver was his quiet money. He said, "The bank account is for living, the silver is for surviving." He didn't differentiate between investment returns and purchasing power preservation. He didn't calculate compound annual growth rates. He didn't compare his silver to the Dow Jones. He had a simpler framework. Every month, buy a little silver. Hide it away. Don't touch it. Don't talk about it. And when the world goes sideways, when the banks close, when the money stops working, you'll have something real. He lived through the 1970s inflation and watched his dollar savings lose half their value in 5 years. He watched neighbors lose their homes because mortgage rates hit 18%. He watched the bank down the street from his shop close its doors during the S&L crisis. He watched it all, and he kept buying silver. Because silver never closed its doors. Silver never changed its terms. Silver never devalued by government decree. Silver just sat there, being silver, being real, being money. I need to tell you what happened when we liquidated part of the collection, because this is the practical reality of silver as a savings vehicle. After the estate was settled, the family decided to keep 2,000 ounces and sell the rest. We needed cash for estate taxes, legal fees, and to distribute among the 4 siblings. We sold 2,127 ounces. The process took 10 days. We got quotes from 5 dealers. The best offer came from a regional coin shop that specialized in constitutional silver. They offered 23.5x face value for the junk silver, $38 average for the Morgans, $33 average for the piece dollars, and spot plus $0.50 for the bars and rounds. Total proceeds, $63,847. We paid capital gains tax on the difference between the proceeds and my grandfather's cost basis. This is where his shoebox of receipts became critical. We could prove a cost basis of approximately $43,700 for the portions we sold. The taxable gain was approximately $2,547. At the collectible tax rate of 28%, the tax bill was approximately $5,641. Net proceeds after tax, $58,206. The tax is a real cost and one that silver investors need to plan for. Precious metals are taxed as collectibles, not as regular capital gains. The maximum long-term rate is 28% compared to 15% or 20% for stocks. This is a disadvantage. It's a penalty for choosing real assets over paper assets. And it's one of the reasons I always recommend consulting a tax professional before selling significant silver positions. There are strategies to mitigate it. Opportunity zone investments, charitable donations of appreciated metal, installment sales that spread the gain across multiple years, 1031 exchanges into other precious metals. But none of these eliminate the tax entirely. It's a cost of doing business in physical metal. The remaining 2,000 ounces stay in the family. They've been split into 4 equal portions of 500 ounces each, one for each of my grandfather's children. My father's 500 ounces are sitting in a safe in his garage. He's never going to sell them. He told me, "Your grandfather spent 49 years building this. I'm not selling it for dollars that will be worth less tomorrow than they are today." He's continuing the tradition. He buys a few ounces every month. He's teaching my nephew to do the same. The silver passes from generation to generation, growing slowly, preserving quietly, surviving everything. Here's the lesson I want you to take from this story. Silver is not a get-rich-quick scheme. It never was. My grandfather didn't buy silver to make 1,000% returns. He bought it to ensure that the value he earned with his hands, turning wrenches in a shop for 40 years, would not be stolen by inflation, by bank failures, by government incompetence, or by financial system collapses. And on that measure, he succeeded. His $87,340, earned through decades of physical labor, is now represented by 4,127 ounces of metal that his grandchildren can hold in their hands. If he'd saved that money in a bank account, it would have been eroded by 50 years of inflation to a purchasing power of approximately $14,000 in 1975 terms. Instead, his family holds metal that has maintained significantly more of its purchasing power than the currency it was earned in. Silver is not a trade. Silver is not a speculation. Silver is a philosophy. It's a declaration that you don't trust the system to preserve your wealth. It's a bet that real things will outlast paper promises. It's a generational act, something you do not for next quarter's returns, but for your children's security. My grandfather understood this instinctively. He didn't need YouTube videos. He didn't need COMEX analysis. He didn't need anyone to explain the gold to silver ratio. He just knew in his bones that metal is real and paper is temporary. And 49 years later, standing in that bank vault with my father, looking at 4,127 ounces of silver that quiet man had accumulated one purchase at a time, I understood it too. If you take one thing from this video, take this. Start now. You don't need $10,000. You don't need $1,000. You need $30 and a coin shop. Buy 1 ounce, put it somewhere safe, buy another one next month, and the month after that, and the month after that. For 10 years? For 20 years? For 49 years if you're blessed with the time? Don't check the price every day. Don't calculate your returns. Don't compare yourself to the stock market. Just accumulate. Quietly, consistently, stubbornly, the way my grandfather did, because the system will try to steal your wealth, inflation will try, banks will try, markets will try, but they can't steal what they can't see, can't access, and can't devalue. They can't steal silver. And that's why my grandfather bought it. This is JonCashFlow. My grandfather bought silver in 1975. When he died in 2024, his family found 4,127 ounces in a safe deposit box. The financial advisors will tell you he should have bought stocks. Maybe they're right about the returns, but my grandfather wasn't optimizing for returns. He was optimizing for survival, and his silver survived everything, every crash, every crisis, every lie, every betrayal. It's still here. It's still real. It's still money. I hope yours will be too. I'll see you in the next one.